Building Relationships with Strategics. This is our 14th webinar of the series. And today I'm excited to be joined by two great guests, which I'll tell you about in just a minute. Uh, my name is Jim West. I'm the Associate Director here at BioTools Innovator and for the past year. And I'm excited to welcome our two guests today. We have Alex DeWinter from Danaher Ventures and Aziz Abedsafian from Nissan Chemical of America. And just as a reminder, we are live streaming this for the first hour, and then we go into a 30-minute closed session that's only for the cohort. We will save questions. If you have them, please submit them through the Q&A form on Zoom, or if you're watching via LinkedIn, you can ask questions there and we'll get those as well. And with that, I'd love to turn it over to Alex. Could you give us a quick intro of yourself?
Sure. Alex Winter, based in Boston with Danaher Ventures, which is the corporate venture capital arm of Danaher. I focus investments mostly in life science tools, also in clinical diagnostics. Danaher is a strategic investor, so we only invest in startups that we might ultimately want to acquire. We can lead rounds, we can join syndicates. We have no issue co-investing alongside other strategics. Our check sizes vary from about $250,000 to tens of millions, with an average check size of about 5 million. And over the last 8 years, that we've deploying about $450 million. So nice to happy to be here.
Awesome. And thank you, Alex. Aziz.
Hey, everybody. Good to be here. Thanks all for attending. My name is Aziz. I'm a technology scout with Nissan Chemical. I've been with the company for about 3 years now, primarily focused on scouting new technologies and collaboration opportunities for the company, primarily in the drug discovery and the regenerative medicine components. Those are the teams I primarily serve, as well as the some of the ag space too. So if you have anything in these areas, I'm the guy you want to talk to speak with our researchers and our team. So we kind of collaborate pretty much with all sorts of companies from academic level up to large scale companies. And yeah, I'm really excited to be here. So talk to you about partnerships. Thanks.
Excellent. So today, this webinar, we're going to highlight the best approaches and strategies to engage, evaluate, and negotiate pilots. We did a kind of a similar panel topic at our summit, and there we talked a lot about sort of how to engage with strategics, but we're going to go a little bit deeper here today into actually managing and growing those opportunities. So I guess to kick it off, for a larger company like Nissan Chemical and Danaher, what are the benefits of engaging in pilot programs with small or early stage companies? What's in it for you guys? What are you looking for, and what do you hope to get out of it? Alex, could you take this first?
Sure. There are a couple of things we get out of it. One is Danaher is a fairly acquisitive company, so we have grown largely inorganically by acquiring other companies. And for us, the opportunity to partner with a startup or even a corporation is just to get a sense for how well that product line integrates into either our sales force or into just our general operations. So sort of a try it before you buy it opportunity. That I think that explanation goes for both investments as also for partnerships with early stage companies.
So, Alex, are you saying that you guys don't really have like an overarching sort of mission or strategy or strategic bets on exactly where you think the market is going? You're more of it's more of sort of seeing what comes at you and what makes sense in the market at that point in time. Is that what you're saying?
No, not at all. No, we do spend quite a lot of time doing what we call market work internally, which is assessing both our current position in the various markets in which Danaher plays, but then also future developments, future markets where there are adjacencies or obvious opportunities for synergies. So we spend quite a lot of time assessing areas, spaces where there are opportunities for us, both from a technology and market standpoint. And we spend quite a lot of time assessing the startups in those spaces. And so we assess them both from an investing standpoint. If we assess an area as a strategic imperative for us, we do go ahead and try to invest in that space by picking the winners. We think winners, of course, who can say, but that's what we're trying to do, both from a startup investment standpoint, but also from a partnership standpoint. So we are fairly deliberate about the areas that we are trying to get into. It's not just sort of see who comes to us. We have within each of our operating companies, be it Cepheid or Cytiva or Beckman Coulter or IDT, we have technology scouts who are currently looking for products, portfolios, technologies that could solve an issue or an internal problem internally. So we're trying to find those companies to actively partner with. And again, that could be a partnership or an investment. A lot of times, I would say we're much more prolific in terms of partnerships than we are investment. We only make a few investments a year, but we are much more prolific in terms of partnering. But if some of those partners ultimately need capital, that's when a conversation with ventures sometimes makes sense.
That's really interesting. So when you talk about sort of, you sit on top of sort of the Danaher parent organization, but you said each sub company has its own scouts. Do you guys have a lot of communication? Do you, if you see a deal that's right for Cytiva, I'm assuming you would pass that along to them, and maybe vice versa?
Yeah, absolutely. Yeah, there's a lot of crosstalk going on internally to share opportunities.
Awesome. Okay. And Aziz, how about you? What are the benefits for working with early stage companies, and what kind of are you guys looking for?
Yeah, absolutely. So, Alex mentioned a lot of things that definitely we have in common, like where we're looking for, future market opportunities that, for Nissan Chemical, we're a chemical company. So we're looking to apply our chemical expertise in areas where there are some unmet needs, and working with the startups, like Alex said, try it before you buy it. It's a very important part of us de-risking maybe new markets that we're getting into, or applying this expertise that we've developed for such a long time. Um, so that's definitely a big part of it, de-risking a lot of new areas that we're working into. But kind of like I would say definitely the more organic growth that we've achieved in our own internal technology has been through a lot of these pilots and partnerships. So like our drug discovery platform that we've worked with, a lot of that came from either academic level Japanese universities or startups. And kind of my role moving forward is to continue that, expanding what we have internally. And a lot of that comes from these pilots and partnerships. So that's usually the direct path to getting internalized. So
Yeah. Do you have any sort of like a case study that you've experienced or seen with a company that kind of started off as a pilot and maybe went on to
yeah,
something more?
absolutely. So I can say that one of our technologies for our antisense oligonucleotide modifications came directly from a pilot. So this is something that's a very core part of our ASO platform now, is directly from that startup. So, and it was like, try it, see if we can build it internally as well, and validate that technology, and then further on we can make a licensing deal with that company. So
Yeah, and how big was that company when they approached you, and how did they sort of get that conversation started?
it's a good question. A lot of that is kind of like a lot in maybe the Japanese like to communicate is relatively small, so a lot of people know each other. So that's one part of it. But let's say like it's maybe like a Series A, late Series A, early Series B level company when they approached us about that time.
Okay. And Alex, you as well. Have you seen? Do you have any sort of case studies you've seen where companies have started off at a pilot level and moved on to some form of investment or partnership with Danaher or one of its companies?
Yeah, so we had I mean, one of our we don't typically talk about. We're weirdly secretive. We don't typically talk about specific companies we've invested in, but ones that have we've acquired, we're free to talk about. So we had a partnership early on with a company called Precision Nanosystems. It makes instruments and cartridges for producing lipid nanoparticles, which are crucial to genetic medicine. So Danaher and Cytiva were discussing partnerships around there. We ultimately made an investment in the company, and then Danaher bought the company later on. So that's one of the cases in which we did acquire the company. But so yeah, it was an issue where Danaher again through its market mapping had assessed that lipid nanoparticles were critical to doing genetic engineering of cells, to cell engineering, and as it was looking at the space, it was assessed that PNI was one of the top companies for producing those LNPs through discussions with pharma partners. So ultimately made a partnership there and then ultimately invested there and then acquired there. So that was one of our sort of shining examples of a partnership to investment to acquisition within Danaher.
That's great. Did when you engage with these companies like that, kind of making a commitment to an investment and kind of seeing where it goes, is is that in some way an indication into your interest for a future partnership or acquisition?
Yeah. And actually that's why we don't that's why we
Talk
don't
about
really
it.
reveal the companies that we've invested in. We're trying to it is unusual. I've worked at a financial venture capital firm and another corporate venture capital firm, GE Ventures. Um, and in every case, every other venture firm I've been at, we're very open about the sort of things we invest in, and specifically the startups we've invested in, except for at Danaher. And that is because we're placing early bets on companies that we hope can get into our acquisition funnel. And so we're trying to avoid telling folks this is where Danaher is going, which is kind of awkward, but that's the way we operate.
All right, well, we'll keep it as anonymous as you need to. So
I'll be vague, unfortunately, in some of my examples.
when companies coming through our program, oftentimes they're at the seed, Series A kind of stage. They're getting into the market. They're building their proof cases and their data sets and all that stuff. When's the right time to approach you guys, introduce ourselves, say, hey, here's what I'm doing. Is this of interest to you? What's the best timing and way to go about that? And Alex, you can pick this one up first if you'd like.
I was just sneezing there. Yeah, for us, I mean, so Series A is for Danaher, this is our typical engagement time for investment, but I think it's also a pretty good time to discuss partnerships. So at least for life science tools, Series A is usually a company has reached proof of concept, might be raising capital to launch the product. Um, and I think as a lot of life science companies are looking to launch a product, they're sort of making the decision of whether or not they should build up a sales force suitable to distribute and market their product, which is an expensive endeavor, especially if you only have one product. And so that can make sense at that time to discuss partnership with a Beckman Coulter, which could have a portfolio gap that would make sense to sort of help market the product if there's enough margin there to basically share distribution. And when that happens, that's a good time to engage with us. And in other cases with diagnostics companies, diagnostic Series A can mean something slightly different. They're still trying to figure out their diagnostic algorithm. They're setting up their panel of biomarkers. That's a little bit early to engage with a Danaher. We typically like to see a little more clinical validation of diagnostic algorithms prior to partnering. But for the other areas that we invest in, which include tools and technologies for bioprocessing, be it protein-based therapeutics or cell or gene therapies, I think Series A is a pretty good time, meaning that you're sort of on the cusp of commercialization.
Great. And Aziz, how about you guys?
Yeah, so ours maybe is a little bit more relevant to what the that early pilot might look like. So I would say engage with us once you feel like you have something to talk about that you think is relevant towards some of our company's expertise. So, for example, if you're developing a AI platform for like peptide drug discovery, well, we have a really strong peptide synthesis capability. So once you got to the point where you would actually want to start testing that, or you want some sort of partner to help you build those peptides, that would be a good time to engage with us. So once you have something that you think would be a pilot with some legs, so a little bit past the proof of concept and finding us and knowing what our expertise is and seeing if there's a match, that would probably be the ideal time to discuss. Yeah.
I mean, it's a little tough though in some cases, right? Because there's areas you guys are maybe interested in going in the future that you aren't maybe at right now, or maybe you don't necessarily want to publicly disclose all of your thoughts and strategies about where you want to go. So if a company doesn't see a direct alignment in where you are, does it still make sense to reach out and have a conversation, or should they kind of just move on to the more targeted targets who are more aligned with what they're doing
Yeah.
today?
I definitely think that there's no problem in saying hello early, right? And even if the opportunity is not very well developed, or if you think that's something that you guys want to revisit in maybe a year or two, it's very good to introduce yourself to a partner company or potential strategic in the future. A lot of these things take a long time anyway, right? To get approvals and things like that. So you're going to be talking with these people for a while. So I feel like it's really good to engage relatively early and
Yeah, so that's kind of I guess your role is really helping to source and find these opportunities within the world for Nissan. How do you like to be approached? Do you like referrals, just direct emails, say, hey Jim, can you introduce me, or how do you?
Sure. No, I think like if you have my email, you can always email me. And if you know some of my friends or if you know the people at BTI, definitely message them. But I think that it's always great to see that like one of my friends or one of the colleagues that I've worked with, like, hey, this recommendation from somebody like that, it's like this is definitely on your radar. They already know what I want and they already know kind of what Nissan Chemical is looking for. So if they can kind of pre-screen you, I can already assume that there's something with legs on the other side of that email.
Okay. And Alex, I'm just going out on a limb here. I'm guessing you probably have a lot of inbound communication coming at you every day. What's the best way for interested companies that are like wanting to have a conversation, introduce themselves, find out there could be a fit now or in the future? What's the best way for people to sort of reach out and engage with you guys?
Yeah, I mean, we get emails all the time. I think through other co-investors, through just meeting at conferences. But yeah, just typically an email with an executive summary or a brief pitch deck is the way to go. And as I said, since Danaher Ventures doesn't really, kind of do have a website, but not really. They have to be a little scrappy to find me, which is a good sign for an entrepreneur if they can actually figure out my email address and reach out to me. That's always a good first sign. But yeah, we get a lot of inbounds with companies looking to raise funding.
Cool. So cold is fine as long as it's targeted and makes sense.
Yeah, yeah. I mean, I get all manners of startups. Like yeah, in terms of things that Danaher invests in, we don't invest in therapeutics, for example, or in surgical devices. And I get a ton of surgical device and therapeutic startups just sort of reaching out. I always respond. So I always just say, we don't really invest in spinal devices or what have you. But yeah, targeted is better.
Okay.
And actually the best, and just to say one other thing, I mean, the best emails for me or for I think any strategic or really any investor is showing you've done a little bit of homework. So in the case that one thing that I like to see, and I'm trying not to be too prescriptive about this, is for example, if they say, we've been in touch with Coulter, or we think our product would work really well with Cytiva, or some mention of this is why I'm reaching out to you specifically, because it seems like we could really work really well with this particular aspect of what you do. That is always, uh, I think, gets more attention than just sort of a blind reach out.
Yeah. I mean, for both of you, I'm curious, you both have companies that have research organizations, manufacturing, the works. How many deals that you guys look at? Do any of them come like bottom up from the sort of the scientists, the R&D departments, like, hey, this company approached us or we're working on this thing. Does anything come at you guys from the bottom, or does most of it come sort of through you as a filter to the companies, or is it a mix?
Yeah, I can definitely say that especially for like US based opportunities and things like that, maybe like 95% of it comes from our side, right? And it goes to our colleagues at the Japan headquarters usually. So
In our case, I mean, it's a pretty good split of things that just sort of come in over the wire versus things that come from internally. So as I mentioned, we have technology scouts for each of our operating companies who are in the business of trying to find partnership opportunities, external innovation for solving problems that we have. Um, and so they have a pretty good finger on the pulse of innovation, be it startups or at other corporations. When they do reach out to a startup and it's of interest, for a partnership, and that startup is requiring capital, they always ping us. And so we do see quite a bit of deal flow from our internal innovation scouts.
That's great. So one of the things, and this question comes from one of our cohorts, but anybody who's done a deal, you need to get your internal champions to help get something sort of noticed and moving on a bigger company's side. And in this scenario, it seems like the champions with the most pull are either A, senior executives with significant operating independence and budget authority, or a product manager with top line responsibility. Is that the right way to think about it, or is it too simplistic? And how do you guys sort of see that in your organizations?
Oh, am I off mute? I'll go first. Yeah, I think it is. No, that's the right approach. You want to find somebody high enough uh, in the hierarchy that they can actually make things happen. For a partnership, I think that's critical. For investment, you just need to find the right person with, like, the investing team is relatively small. There's like six of us. You just need to find the right person to carry forward with diligence. And we all try to be responsive in terms of where each startup that we see is in terms of the workflow. So we have multiple stage gates we go through as we consider an investment. So I think we each are, once you've sort of identified the right person to be talking to within Danaher Ventures, for example, it's just a matter of, you know, sort of moving forward through the pipeline of a deal, which is different from a partnership. But yeah, within Danaher Ventures, you just find the right deal lead. Within a partnership within one of our operating companies, you need to find the person who is interested enough and high enough up that they are moving the partnership forward.
Do you ever see that from sort of the R&D scientific side where they're so impassioned about an opportunity or a product, they're like, we've got to support this?
Of course. Yeah. I mean, one of the sort of interesting challenges of venture in general, and certainly corporate venture, is you see way more opportunities that you can invest in. And a lot of times, for example, one of our scientists or a partnership lead will see a company and say, like, we need to invest in this when we absolutely need to invest in this. Um, and within Danaher Ventures, we're held to a couple of standards. One of them is we want to invest in companies that we might ultimately want to acquire. And that box is largely checked if we have a super passionate deal lead within one of our operating companies. The other metric we're held to is that we want to invest in companies that will make money. So we don't, there's the fraction of companies we acquire is actually pretty small. We've acquired 2 of the 50 that we've invested in. Only 12 of them have exited. So you can either look at it as 2 over 12 or 2 over 50. But the issue is that we don't want to invest in a company, have Danaher not acquire it, and then find out that the company actually is, losing tremendous amounts of money or goes out of business. That's never strategic to lose money, as we say. And so we have to go through, despite the enthusiasm from our operating companies, we do still have to go through the rigor of making a financial model, assessing what we think the company could be worth now versus in the future, to ensure that we're making a good venture investment. And so that doesn't always match up. So sometimes a company could be highly strategic, but maybe not a great strategic fit. And in those cases, we do decline in investment. And that can be a difficult discussion to have with our internal scientists and our internal leads.
Gotcha. Aziz, how about you?
Yeah, I'd definitely echo a lot of these things. This is maybe for Nissan Chemical, it's more of a company where you can kind of work through the consensus and work your way to the top. If you get the tech scout to be part of your champion roster, and then there's a product manager in the company that's also really enthusiastic about your tech or your product, and it works its way up. This is something that's happened before and several times at Nissan Chemical. I could definitely say that if the research teams are very excited about your technology and that you're working with and the product you're building, that's a very, very good sign. And you want to definitely get them, for us, our company especially, you want them to be your champions. Those are the ones that are going to be probably pushing it the most upward. And once we feel like in our groups that we feel like we have a consensus that our teams are really well aligned with this and this can make a really big impact, or we have a lot of synergy together for like a collaboration or partnership, that's kind of the way to the top for us, much
Yeah,
less top down.
interesting. So, Aziz, I'm assuming in some scenario you've probably played the role of a champion before, internally.
Yes, always.
Always.
If I'm not your champion, it's probably not going to get through on my path.
Sure,
So
sure. So, I think one of the things I've always wondered is, from the perspective of an internal champion, are there, or what type of risks do you take on as a champion for a company? Ultimately, it sounds like there's probably a little bit of reputation. You're staking, hey, I believe in this, but if it doesn't go well, what kind of risks are you taking by championing a company?
Yeah, I would maybe expand that to two things. So it's like definitely a risk of like, oh, Aziz brings in companies that never fit into the, strategic interest. Like we wouldn't want that to happen. But there's also benefits of like, the good side is that if you actually do bring in that company that's um a really good fit and it ends up being a really big business, that tech scout or that early champion gets to kind of ride that as well. So I would don't want to just make it sound like it's just a risk, but
Yeah.
there's a lot of incentive for us to want to get it across if it makes sense. So, but and besides just like the reputation risk, like there's a lot of, like Alex said, there's a lot of deals that we could be working on. So there's some opportunity cost as well that we have to really consider. Um, we can't pick every single great deal that comes by. We have to kind of limit that to what we can do in a given period of time, given budgets. So there are some restraints.
Okay. And Alex, I'll give you a chance to respond if you want, but I think yours is pretty clear making investment decisions.
Yeah, no, it's yeah, we're asked to make investments that in companies that are highly strategic and financially sound. So yeah, and if we don't, that's not great for us.
Yeah. Okay. So the next question also comes from our cohort, and it's really a question about, I think, sort of scale and stage. So sometimes it seems like you're pitching a big deal, and it's too big or too much for a partner to jump into all at once. So sometimes you have to start something smaller, but sometimes you got to balance that because big organizations, if it's too small, it's not going to capture their attention and move the needle. So, from the entrepreneur's perspective, how do you sort of walk this line? How do you gauge whether you should be pitching a big deal or a small one, and how to sort of position that with the larger entity? Um, Aziz, you could probably kick this one off.
Sure. So I think maybe one good example is like if we took like a process development context, like there was a process in Nissan Chemical, let's say for like a drug discovery that an outside tech could be used and applied within. I think that for the entrepreneur who wants to bring his product into Nissan Chemical or wants to try it out, find a very small but representative pilot that's like if this works at a very small scale, it can be like reasonably applied at a large scale within the company and it'll affect a lot of the processes, not just like the small group. Or with this kind of avoids the problem of maybe bringing something that's way too big. Like we want to change all of your machines all at once right now. This is so, but at the same time, it's like we don't want something too small. So a little bit of small opportunity that seems palatable, but it's like we can make a lot more if we need to kind of thing.
So is that a conversation just to have? It's like, let's do a small proof of concept. Let's make sure that's aligned. If that goes well, then maybe we can consider X, Y, or Z
Yeah.
down the
Yeah, I
road.
think yeah, definitely. It's very case by case basis, right? But I think just knowing that at least being able to tell the story that like this could go somewhere very big is at least enough, maybe is enough to entice the teams like, okay, this is worth us spending our time to investigate.
And
Again,
how do you guys, if a company approaches you and says, "Hey, you're interested, we're interested. Here's a huge project," and that's more than you guys are comfortable with. How,
yeah,
how
no,
would you how would you how would you deal with that? How would you address it? Would you just walk
sure.
away,
I
or would
know.
you say,
No,
"Hey"?
I have no problem with telling like a company like this is a little bit too big for us now, but if we could try this at a small scale, it's still really interesting to us. What would you guys think about that? And it can definitely be a negotiation. So it's like,
Okay.
well, this is a little bit too big for us, but what if we do it small like this and then see where it goes? If that works for both parties, then we can move forward.
And Alex, back to you. Have you seen any of this on your side?
Not really. I mean, a small deal for us would be like a maybe a company that's trying to raise $250,000. As I said, we have done $250,000 investments.
Hmm.
Those are normally seed stage deals, so we've done those I think earlier on in the history of Danaher Ventures, and we're leaning a little away from that now. And so from an investing standpoint, that would be a little too small for us. We have gone up to $20 million, I think, for an investment, which is about as big as I think we would need to do. So there's not really a deal that could be too large for us from an investing standpoint. There are deals that could be too small, though.
Right. But I guess in terms of in terms of sort of companies, where they're at, what they're trying to get to, it's different in a deal versus an investment. And there's
Yeah.
other considerations around all that, right?
Yeah,
Cost, time,
from
personnel,
a
interest,
deal
opportunity.
standpoint, from a partnership standpoint, I do have a little less visibility into that, but I think if the partnership makes sense, uh, and that's always the big question, of course, if the partnership makes sense. But I don't think there's a deal size that is too small or too large to be an issue. It comes down to whether or not a partnership makes sense.
All right. So we'll go back to you, Aziz. When evaluating potential pilot opportunities, what are the most important factors that influence your decision to proceed? Is it technical innovation, market opportunity potential, just alignment with sort of the company? What's the factors that go into that decision?
Yeah, definitely like alignment with Nissan Chemical. So it's like this is one of those parts where you should definitely do your homework about like what kind of company we are and where we're located. And so it's what can Nissan Chemical provide as a partner to this company, to your company, that another company might not be able to. Right. So if we're a strong like nucleic acid synthesis company, we have some internal like novel technology about that. If your application is relevant to that strength that we have, right, or complements weakness that we have, this is kind of where we would start, right? But market opportunity is definitely important, but if it's not something that we could excel in, we wouldn't want to really engage in that. It's like that's maybe a deal for another company, not for us.
Sure. Alex, you have anything to add?
Nope, that covers it, I think.
Okay. So what questions should be asked to figure out if there's a good fit before an engagement and just sort of during the discovery meetings? Have you seen topics overlooked? Have things come back to bite you later? Or are there definitely like a set of questions companies should sort of go through to make sure that there's alignment and interest?
Again, I'm coming at this. Well, I'll just start. I'm coming at this from a slightly different perspective in terms of investing. Usually, uh, usually it's pretty clear. Like the startups want capital, and we're here to give them capital. I do think there's always one of the questions that startups should always consider when they're talking to a corporate is why is that corporate investing? It varies. Every corporate investor is different. Every financial investor is pretty much the same. They're trying to invest for financial return, but the corporates do have different motivations for why they're investing. And I've just said why Danaher invests. We're investing to potentially acquire the startup. I don't think that's necessarily a red flag for most startups. I think ultimately they want to exit through M&A or through IPO, and Danaher is a prolific acquirer. But I do think it's important to ask, for example, okay, so Danaher is interested in acquiring startups. Are you guys putting ROFRs in? Are you trying to block out of the strategics? Are you trying to be sort of a creeping acquisition where you're putting in various hooks into the investment? Quick answer is no, we're not. We don't put in ROFRs or anything like that. We just want to be on the cap table alongside everybody else. But I do think it behooves startups to ask every corporate investor those same questions.
Great. Aziz?
I'd say maybe I just like I slightly have to repeat myself in the last one is that like the best questions to ask are questions that we'll find out whether or not there's a good like technological synergy kind of market opportunity between the two companies. Like is there something special that Nissan Chemical can do for you? I think that's probably the most important question. And is there something that you can do special for us? So it's like if there is there a really like unique special relationship that we can build with each other as companies? Maybe that's probably like the
Yeah.
underlying question.
So you guys are looking for opportunities that are, you plus me is bigger than both of us
Mhm.
individually. You want it, yeah, that synergy. That's great. Okay. Um, are there signals that you're looking for from companies as you're sort of working and engaging with them, good or bad, And if you've had any that are interesting, I'd love to hear any sort of stories you've got around, um, yeah, how companies kind of present themselves and connect during the process.
I think I have a couple like really great things that we'd like to see. So we were mentioning before, like how early should you engage with these come with strategic? And I think earlier is better for one reason is that you can demonstrate your ability to reach your milestones right? And show that like, hey, I'm going to do something within 2 to 3 years, and then 2 to 3 years later, you show the company you talked to before, like, hey, we did it. And I think showing that, demonstrating that is a lot. It speaks a lot to the credibility of your team, your technology, your products. So being able to kind of like see a company's progress as they develop and evolve, and that's a very big green flag for us. So
Any others?
their customers are very happy. It's always a really good one. If their customers are kind of like reaching out or advocating for them, that's always a big kind of exciting thing to see. Yeah.
Yeah, those are both two good green flags. Yeah, I think another green flag is, in our standpoint, is if one of their customers or one of their partners, early partners, is actually a Danaher or entity, they can say like, oh yeah, you should talk to so and so at Leica Microsystems. We're already talking to them. They love us. That internally again shows they've done their homework. There's a reason they're talking to Danaher Ventures specifically. I also have some red flags, which are always fun. On a pitch deck, if for example they're like, we don't have any competitors, that's either not true, and well, it's almost always not true. But if it is true, it just means that they're like, why don't they have any competitors? It's just a terrible market. Like there's no competitors for moon gardening also, but is that really that big important market? Or it's possible they just don't know the market very well. And then the other one is if like sort of a weird red flag, maybe a personal pet peeve, is if they say like, in 5 years from now, we're going to be worth $500 million because we're going to go public or we're going to be bought. That to me is a sort of a short-termism view of things. Like I want people to build the biggest, best company they can. Good things will happen if you do, and I don't think you need to worry about like, we're looking for an early exit. That's not what we're doing here. The other last pet peeve is if they say we're raising $20 million at a $50 million pre-money valuation. If they're trying to set the pre-money valuation, that's also kind of a pet peeve because well, if they already have a term sheet, then yeah, there is a pre-money valuation, but otherwise it's a negotiation. So every time entrepreneurs are like, this is the pre-money valuation, are you in or are you out? That implies to me that they haven't done this before. So
Interesting. So a couple follow-ups on that. In terms of where you guys come in, of the deals you invest in, how many do you actually lead?
yeah, probably a quarter to a third of the deals we lead.
Okay.
So yeah. And that's, like, for example, one of the ones, the most recent one we led, or the most recent one I led was a conversation. I'd been in touch with this company a couple of years ago. They weren't raising capital at the time, and then I think they did raise a round, but I wasn't in touch with them. And then Beckman Coulter, one of our operating companies, put me back in touch with them. And like, we're really interested in we're interested in this particular startup. You should chat with them. So I started talking with them last August based on that conversation. We were talking and talking, and I was, doing diligence, waiting for them to get a term sheet. And then I think it was in January, JP Morgan. I was talking to them and I said, they're like, so where are you in diligence? I was like, we're pretty much done. Like, it only takes 2 to 3 months. I said, we're pretty much done with diligence. We're just waiting for you. We assume that you're going to like get a term sheet from a financial investor or some other investor. And, we're ready to participate pretty much once we hear the terms of those deals. And the CEO was like, I thought you guys were going to lead. You said you could lead. And I was like, well, yeah, but most people don't want a strategic lead. He's like, no, we want you to lead. I'm like, all right. So it took us a little more diligence to get to that position. We make like, for every startup, we make a 10-year financial model, which is more further ahead than most startups tend to think, which is totally understandable. We say 10-year financial model, we discount it all back to figure out what a target price range is for us that sort of flies either for if we're doing if we're like joining a syndicate and the round is priced above what we think it's worth, then we typically won't invest. Or if we're leading around, that's kind of like we want the pricing to be in this window. And so we went through all the work. We created a little more conviction in our points. So we had to, dot a couple more I's, cross a couple more T's to lead it, but then we did lead that round. So
Okay.
we
I've
normally
seen so many. Oh, go ahead. Sorry.
no, I was gonna say it's normally not my preference to lead around because it's always nice to be able to be like, it's their fault. They're the ones who are leading and putting these terms in here. But every now and then we do.
There's that risk of championing.
Yeah. Yeah.
I've seen so many 5-year financial models with the hockey stick. I can only imagine what 10 goes to. I'm just kidding.
Yeah, no, it's a, it's as a side note, kind of a, as sort of an interesting side note. So now we've invested in 50 startups. My manager was like, we should do this project. So I can't say it was my idea. I thought it was a good idea. Once I heard it. But let's do a retrospective look at what the financial model was for the startup, what our financial model was, because of course we always discount back the financial model, and for the companies we invested in, how did they achieve their milestones relative to what we put in. And so it's just kind of interesting project where you're like, well, their financial model was like up into the right hockey stick. Our financial model, we invested in them, we believe in them at some point, but like, do we discount it by, did we discount their top line by 25% or 75%? We discounted more by 75, by more than 75%. Why are we investing in this startup if we don't believe in the management team? And then how do they actually hit their milestones versus what we plotted? I think it's a good project for any VCs who are out there. Should we do this? Just in terms of how optimistic you are, how much credence you put in the management market, and then how they actually achieve, like how well do the management hit their market? I will say it's not encouraging. The results were not great. I mean, some of the companies we invested in are doing great, but like nonetheless, it was
So
sobering.
if you're an investor on the call, do it as an internal study.
Yeah, yeah, you may not want to like present the numbers too widely, but it's definitely an interesting project.
I also love what you touched on with the competitor section because I've always thought and told companies too, I'm like, somebody not buying your product is a competitor. Even if they make no decision, it's not money coming to you. It's money going elsewhere. So yeah,
Yeah,
I think there's always competition and they're doing it some way today or they're not at all, but it's not you.
yeah, yeah, yeah. Yeah, it could be homebrew. A homebrew solution is just as much a competitor as a Danaher company or someone else.
Yeah, Aziz, we talked about the green flags. Alex said a few red flags. Are there any you've come across, any like big mistakes, turnoffs, either personality or business type or whatever that you've come across in your journeys?
Yeah, there's definitely a couple. I think maybe some like high level ones that like can are maybe fixable that I would say. If you're like, just like sour personality, it's probably not gonna go really far. It's like, rude, late, etc. Um, Maybe one thing that I think some companies can improve on and is how much they're willing to disclose early on. If everything's kind of like going to be behind, your NDA, even for the first conversation, it might be really hard for us to kind of move forward with that or like kind of convince or find that champion internally if we don't know anything about the details of the technology, like before that, like first conversation or during that first conversation. So like showing us that you're able to like share some information at some point, right? It's really good. So if you're not doing that, that's pretty bad. Um, yeah, maybe
And I'm
that's one.
assuming that's not like confidential information, or maybe you do or don't have an NDA yet. There's an appropriate line there, but I guess are you talking about maybe unwillingness to disclose really non-critical, non-confidential information, or
I think that maybe like some people are maybe afraid somebody's going to steal their ideas kind of thing, or they can't disclose too much information early on. But there needs to be some openness. Like, you're looking for a partnership, right? So we would like to see that like, you have some sense of what I can share right now, what I can't share right now. And that should be reasonable. And at least enough
so
for some sort of early decision.
okay. I was gonna say on that topic, are there, are there things that, how would you advise companies in terms of things that they should definitely share or maybe even consider keeping close to the vest in these early conversations?
That one definitely very case by case. I think that it varies
Yeah.
a lot. Like if you have like trade secrets protecting your technology, or if you have like solid IP portfolio, those are like two really different situations where you have to approach a company differently. But if you're really confident that your IP is good, you should be able to share to some degree. So
Okay. And Alex, have you seen this on your side at all? Is this something that
Yeah, I mean, I think there's a natural concern when you're talking to, because one of my first, to be honest, one of my first calls I have with startups is I say, well, it sounds interesting. The next call, I'd like to bring in my colleagues from Cepheid or Leica, just to assess technology and get a sense for the strategic relevance. Um, Leica could be a competitor. So you may not want to be telling them your trade secrets. So I normally the first call is not under NDA, just talk about it at a high level, like stuff that's discoverable on the web anyway. And then if there's interest, then yeah, at some point you're going to have to start talking about stuff. We're totally fine to sign a CDA. But the issue is with companies that totally don't reveal how they do things there's always a question of like, well, is this a Theranos? Like what's going on? You can't even talk about how your technology works. That is a gigantic red flag. I'm a scientist. I like digging in on the technology. And if you can't even tell me how the thing works, that's going to be an issue.
So backing up to the NDA real quick. So if a company is working with you or your team and they're signing an NDA, that would be with Danaher Ventures. So if Beckman Coulter like as a potential competitor, you're obligated to sort of keep that firewall between those entities.
Yeah,
Is that right?
there's a couple things there. One is our standard Danaher Ventures NDA does cover anyone else from any of the operating companies who's in the conversation. So there's that, but we're also a belt and suspenders approach. We take a belt and suspenders approach when we do the IP. So if the conversation is occurring independently with Beckman also, even though we've signed an NDA already with Danaher Ventures, they normally sign a second NDA with Beckman to make sure that's all good. Yeah, we typically take, we're fine signing multiple NDAs, but just to have the investing conversation, we do have that Danaher Ventures NDA, and then we normally bring in a couple of our scientists from the various operating companies to help assess it. And then the other side, we didn't ask this question, but it's sort of an interesting question, I think, is if we're on the board or a board observer, we're going to hear a lot of confidential information about the company, right? And so companies are always concerned about like, well, if we're a board observer, we can recuse ourselves during particularly sensitive things, or if we're a board director, typically we're not recused. From a ventures perspective, like we don't share that information with our operating companies. We also at JP Morgan, we met with one of the companies that we're a board director of, and some of our group executives were asking them like, how much revenue do you have? And they're like, but Alex is on the board. And they're like, he doesn't tell us anything. Like, we really try to have a Chinese wall up between the privileged information we get from the board meetings and what we actually share with our executives. We'll tell them at a high level the company's doing well, or it's hit a couple of targets, a couple of milestones that would indicate we sort of preset milestones that would imply that maybe business development should have a conversation with them to discuss whether or not this is the right time to have an acquisition. But we don't share anything beyond that. Business development will go into the conversation relatively blind, except for knowing the company's doing well to have that conversation about acquisition.
Okay. So Aziz, when you guys are working with a company, can you walk me through sort of when you start actually talking about a deal? What's the typical timeline and process for partnership negotiations, and what are the sort of major things to discuss and decide on in that process?
Yeah, so that's I can just open by saying like our company is a slower company when it comes to this. So some of these things can take up to a year and more. The reason maybe it takes this long is like there's a due diligence step. There's like we're starting with a pilot, and then we're evaluating technology, and we're kind of moving forward to see like what's the best business opportunity between Nissan Chemical and what startup or the collaborator is offering. Like, and that's a kind of a strategic and like joint conversation between both companies. So this can take a while. I could say it could take up to a year. We've had things that have taken more than a year, things that take less than a year. So it does vary a lot, but I think patience is definitely key, and especially for us, I kind of mentioned earlier, like we're a little bit more consensus driven, so we're trying to get everybody on board before we move forward. So it can take
And
some time.
what are the major points that sort of get negotiated from your perspective in these types of deals?
So a lot of it is it really depends, because it depends what the company is coming to us with and what stage of maturity that they're at. If we're discussing like development of maybe a new product based off of their technology and our technology, or if it's something simple like, oh, we want to distribute it in Japan and you're the right people to do that for us. Those are maybe like the conversations will look really different about like what those are. Obviously, like a distribution in Japan or something like that, that can be relatively short and simple, right? There's not too much to discuss. But if we're discussing like, developing new technologies, like how the how new IP will be shared, for future geographies when the product is developed, like who will have, what rights to what area. It's like, these things may be at least have these conversations early, as that's kind of where they'll be started. So.
Okay. Alex, when you guys are working with companies, how do you guys sort of structure milestones and benchmarks for a deal? Sometimes they don't all happen at once, or there's tranched um, layers or funding.
For investment, usually, at least on our initial investment, it will just be all capital goes in at once. Tranching is rarely great for startups, because it's difficult to project the future. So if you're trying to tranche based on a milestone 2 years out, or a year out, it's possible that the market conditions would have changed or something would have changed so that the company doesn't even make sense for the startup to hit that milestone anymore. Then the whole board has the question of like, well, do we just fund them anyway, even though they didn't hit the milestone? There's always like mitigating factors. So tranching I normally think of as not ideal scenario. There are cases in which case tranching makes sense. Like for example, Zyra, the David Baker, recent Nobel laureate. Congratulations, David Baker. Uh, Protein design company recently raised something like $1 billion Series A. I assume that's massively tranched. You don't just give a startup $1 billion and you're like, how about it? So I assume that's tranched based on hitting some preclinical milestones. But for most of we don't really participate in those gigantic fundings. So most of the time we're not tranching. We're doing like we're part of a 20 million, maybe a $50 million round, not these crazy $1 billion rounds that usually are tranched.
Okay. And Aziz, on your side, similar question. Do you guys structure deals in terms of like smaller, bigger, small, medium, big, or, different milestones? How do you kind of come up and set those, and how do you guys like to structure those?
Yeah, so I think it's very different from like kind of like an investing perspective, because a lot of the times like there might be a whole like spin out that we're making together with this company, or there I think it varies a lot, but there's always like a first like threshold of like validation that we need to have, like a small milestone. Like, does the work to company technology work as advertised? Like whatever you're putting on your PowerPoint, whatever's going on your slides, like can we demonstrate that in our own lab? Like just to do what you said it did, right? That's maybe like the very, very first, like everybody has to go past that threshold. Then maybe at that point, like there's like a medium or a large, if we're putting it like that, or like a middle stage or a late stage. Maybe the middle stage is like how well does it integrate with our own technology, and then the late stage is like
Yeah,
how quickly is that.
and being kind of a consensus-driven organization, how do you guys sort of internally manage those needs and expectations? Is it arrive at through consensus, or does someone kind of drive those, or who kind of has that ownership, if anybody, in the organization?
I think it's like a combination of all of the above. Sorry if
Yeah.
that's the kind of odd answer, but the champion is definitely like one of those ones who's really driving that forward and thing. And if they're not the only one who's seeing that setting these milestones, setting the expectations of if the opportunity can do X, Y, and Z, and if it's actually doing so. Generally, like our upper management and our like quote unquote check signers, right, are usually convinced by that. So it's very much from the bottom up at that point.
Okay. So this is an interesting question. The next one here, it's how do we benchmarks agreements that we set up with strategics, in terms of license agreements or investments? How do we determine if they're fair? Do you guys have any thoughts here?
Yeah, I can definitely say it's always really hard to benchmark it exactly. If you're a innovative startup, like your technology is going to be new, and there's going to be things that are not comparable to it, but you want to try to find the closest thing possible. If you can set like a floor to what you expect to get from working with another company, that's probably at least the bare minimum that you should be able to do, right? Like I shouldn't be taking anything below this, or I shouldn't spend more than this much time working with my team on these projects, right? For this amount, right? It doesn't make sense for me to do at least this. So Yeah, find some friends. I think BTI is a great network. I'm just gonna plug BTI. There's a lot of people who've done this before. So if this is your first time, or if you find somebody who has a lot more experience than you, those are the type of people to ask.
Yeah, and
Find
Yeah,
some.
also, I mean,
I,
like everything else, these are, people know the horror stories of getting taken advantage of in different business transactions and relationships, but it is a relationship at the end of the day. And I think you've got to find like a structure and a deal that's a win for everybody. Um, because it doesn't really matter what's on the paper. It's going to fall apart if it's not the right deal, right?
yeah, I was gonna build off what Aziz was saying that I think it's difficult to know what is a fair deal if you sort of take it in a vacuum. But I think advice I'd have for anybody at any stage of the career, well, earlier in your career certainly, is to find a mentor. So have a business advisory group, have somebody meet with some people who've done this before, who have experience partnering, or who have experience running companies. Sort of a group of people you can bounce ideas off of, so that you're not basically guessing like, I wonder if this is a good deal. Seems okay to me, and then find out that you're taken advantage of. That goes for partnerships. That goes for technology development. Have a good SAB if you're early stage in development. Find people who've been there before, and it's a good practice, I think, as an entrepreneur or CEO, to convince them to join your cause. That's kind of what you're trying to do as a CEO anyway, is convince people to help you build this thing. If you're convincing people who should know better, because they are mature enough in their careers, if you convince people who know better to help you, that sends a pretty strong signal to future partners or investors. Like, oh, that guy or woman is sort of supporting your company. That's a pretty good sign. It helps. That's a green flag, I think. And those people obviously not only serve as validations of what you're doing, but also can be really valuable sources of information, such as determining whether or not a partnership is a good one.
That's great. Um, we got time for one more question before we close our open session here. And this question also comes from the cohort. And I'm going to position this more as a question for you guys as a mentor, as opposed to like your representative as your company, because I think it'll be a more interesting answer. But the question is, you know that your product aligns with Strategic's portfolio, given indications from the company's employees and mutual customers, but you're having minimal luck gaining traction with the leadership team. Why? What's the best way to get a trial to demonstrate further value?
That one's a hard one. I mean,
Yeah.
I think the thing to recognize is that everybody internally has got lots of different things pulling on them. And so, um, yeah, there are a couple ways that question can go. One is just go to a competitor. Like Danaher never likes to hear that, but if you go to Thermo Fisher or someone else, they're like, I partnered with them. Ha ha. That's not great, but that's, if you're not getting traction internally, if it's truly important to your executive champion, whoever it is within the strategic you're talking to, then it seems like they'll get it done, even though people always have, everybody always has a lot of other things going on. And so it's possible that it's not getting traction because it's not a very high priority, unfortunately. I think if you keep pinging the person, not hearing back, that's sort of you have your answer right there.
Yeah, I would say something similar. It's like, if you're not getting too much feedback, like, maybe just let it go. There's plenty of things that you need to be working on as well. And if you feel like you gave them like a fair shot of like, hey, I thought this opportunity was good. It's not, getting too much feedback. Like you should save your time and cut your losses and work with somebody else. If you're really, really set, like this is like really core and you have to, um, maybe if you can find out the reason why it's taking so long, or like if maybe there's a financial issue, like we need to validate, or there's some way that you can, foot some of the bill. If you're really convinced, like if you really want to show like they know this is going to work and I'm willing to put my own money on it kind of thing. If this is like in terms of a pilot or something, or being able to, usually this, I'm kind of referring to like context of a pilot. Uh, that might be the way to kind of get across the board, or maybe a little more creative, but yeah, so I honestly think that if it's really been like such an uphill battle, maybe that's a pretty clear sign you should move on.
No, those are great perspectives, and nobody asked me, but I think my perspective on it would be that it's not a no until it's a no. And I probably wouldn't push every day, but I'd probably start pushing every couple weeks or every couple months and just have a data point update, something to just sort of have a logical reason to reach out and say, hey, are you still interested? Have you lost interest? Kind of try to drive to that no, or just keep it kind of going long term. But yeah, I think to your guys' point, it's not going to be a quick conversion. There's definitely something in there that's giving you some friction. So with that, I want to thank you guys for this session. We'll stop the live stream and we'll go into our